Bringing you the latest in tax credit news, this is Tax Credit Tuesday with your host, Michael Novogradac.
Hello, I'm Michael Novogradac, and this is Tax Credit Tuesday. This is the October 8th, 2024 podcast. We have exciting news to discuss this week, something we've been waiting for 9 months. So what is that news? You may have guessed, it's the recent award announcement by the Community Development Financial Institutions Fund, known as the CDFI Fund. The CDFI Fund recently announced the winners of the 2023 New Markets Tax Credit Allocation Issuance Awards. Joining me to discuss the announcement and its implications are two guests who you're familiar with if you listen to or watch Tax Credit Tuesday on a regular basis. And if you're watching on YouTube now, you can see Rebecca Darling and Brad Elphick, two of my partners in Novogradac's Atlanta office and two of the leaders of Novogradac's New Markets Tax Credit practice. Rebecca and Brad are here today to share their insights on this year's awards and to speculate as to what's coming. Now let's go back and give a brief summary of the allocation awards. 104 community development entities received a part of $5 billion in overall tax credit allocation issuance authority. Now, it was the 2023 round, and you might be thinking 2024 for the 2023 round being issued, but calendar year 2023 was awarded in September of 2024. Now, in today's podcast, we're going to talk about how that situation of 2023 round getting awarded late in 2024 is going to be addressed by the combining of the calendar year 2024 and 2025 rounds. Now, for the calendar year 2023 awards, I did want to also share some key figures. Among the 104 community development entities, or CDEs, that received allocation awards, the lowest was $15 million and the highest was $65 million. Now, nearly all of the 104 community development entities that received awards had previously won New Markets Tax Credit Awards. Only 3 had not previously received an award, which does tie the record for the lowest number of first-time allocatees in an allocation round. Now, we don't know how many applicants had never received an award before, so we don't know quite what that capture rate is, but we do know that it's not 100%. Now, a particular note, this year's round did feature the highest percentage ever of allocation issuance authority going to minority-owned or minority-controlled CDEs. It also had the second highest amount of allocation authority going to be, that's being planned to be invested in rural communities. And when I say the highest ever for minority-owned or minority-controlled CDEs, as well as the second highest among allocation planned to be invested in rural communities, that's out of 20 rounds of awards. Now, because of how the New Markets Tax Credit Award schedule works, after the announcements were made, considerable attention shifted quickly to when the next round will open. Now, as I hinted at earlier, the next round will be a combined $10 billion round. That $10 billion consists of the $5 billion of allocation issuance authority for 2024 and $5 billion for 2025. If we had operated as it had in the past, the 2024 would be open to $5 billion, be awarded next year, and then sometime next year, the year after, the 2025 round would have opened. But instead, there'll be one combined $10 billion round. This means that the upcoming combined round is also the last of the congressionally authorized allocation issuance authority, which highlights the need for the New Markets Tax Credit to be made permanent. And most likely that could happen next year as Congress considers the expiration of many of the Trump-era tax cuts. Now, in today's podcast, we'll get into all of this, but let me first remind you that Novogradac is holding our 2024 Fall New Markets Tax Credit Conference in just a few weeks. It's going to be held October 24th and 25th in New Orleans. All the topics we discussed today during this podcast and so much more will be on the agenda for that conference. And as I always do, I'll share a link to register for the conference in today's show notes. Now, on today's podcast, we're going to start by talking about some of the high-level takeaways from the awards announcement. I'll get Brad and Rebecca's thoughts on that. We're also going to discuss what might be done to increase the number of first-time awardees and why that's important. And after that, we're going to talk about what CDEs and the businesses that apply for and receive new market tax credit subsidized financing should be doing now that the awards are announced and to prepare for the next round. When I talk about CDEs, we're going to be focused on both CDEs that received funding in this round, as well as those who missed out. And then we'll wrap up by speculating about the award application cycle for the upcoming round, including speculating about when the next application round will open, when applications might be due, and when the next round of allocations might be announced. So as you can tell, and as you can hear, we have a lot to discuss. So if you're ready, let's get started. Brad and Rebecca, welcome back to Tax Credit Tuesday.
Thanks, Mike. It's great to be here.
So before we get deeper into the discussion of the awards and the implications, I wanted to start by having each of you share with our audience what services you provide to Novogradac clients. And Rebecca, I'll let you go first.
Great. Thanks, Mike. So I've been with Novogradac & Company for almost 20 years now, and I focus primarily on community development and affordable housing industries. My clients include community development entities or CDEs, developers, businesses, investors, and I help our clients with audits and tax returns, meeting compliance requirements, and also assisting with the allocation application. So reading and providing feedback to our clients.
Great. Thank you, Brad.
Yeah, I do a lot of the exact same things as Rebecca. So one of the other things that I do in addition to the audit and tax and compliance and application work is I also lead the Novogradac New Market Tax Credit Working Group. We are an industry-based organization that spends a lot of time addressing a lot of the issues that we talk about in these podcasts. And it's been a great experience in terms of finding ways to help improve and enhance the effectiveness of the New Market Tax Credit Program. And so we spend a lot of time on that as well.
Great. Thanks to you both. I know you're very busy, so I appreciate you joining me here on the podcast. Before we focus on the next round, it always feels weird to be just completing a round and then so much attention goes to the next round. But obviously for the 104 awardees, there's a lot that they have to be doing now. But I thought I'd start by thinking of the awards, looking at the awards. We don't know all the details about the award, what I should say, the New Market Tax Allocation applicants that didn't get awards, but we have a bit of information about the entities that did get awards. And I'm wondering what each of your takeaways are from this awards round cycle. I mentioned sort of 20 prior rounds, and there's always differences between the rounds and the rest. So Rebecca, let's start with you. What stood out?
Sure. Yeah, I think there were a lot of consistencies with recent rounds, which is what we expected. You touched on a couple of those, Mike. The largest award, again, remained at $65 million. The average award size is $48 million. So both of those are very consistent with prior rounds. I did find it interesting. The smallest award went back down to $15 million. Last year's, for the first time, it was $20 million in a number of rounds. And so we had a lot of guessing of, is this going to be the new normal, the smallest award? So again, we don't know what applicants are requesting. And we are finding that many applicants have adjusted what they're requesting and they're getting allocations closer to what they're asking for. I do find the fact that there are only 3 first-time allocatees interesting because it does tie for the lowest number in the history of the incentive. So I think as we talk about this upcoming double round, that will be something we're certainly going to be looking at. And I was expecting to see an increase in the number of minority and Native owned and controlled awardees, and we saw that increase to 23. So I do think all of those things are very notable. One takeaway that we did notice is we often see many large national financial institutions receiving allocations, and we didn't see as much of that this year. There are a lot of different financial institutions receiving awards, but it was a little bit different for the applicant list this year. But I think another thing to keep in mind from round to round is the CDFI Fund doesn't publish the applicant list. So you don't know what CDEs apply in each round. And so I think that's also interesting when you look at the awardee list, is you don't know if someone's not on the list because they didn't apply in that round. So things to keep in mind.
Great. Thank you for those insights. And I do remember the first allocation round way back in the day when the lowest award was less than $1 million, which ends up being, given that the award is the allocation issuance authority, which translates into 39% of that for credits. And I think the fund realized pretty quickly that there is a minimum size award for it to be economically efficient to go through the process. So let's turn to you, Brad. What are some takeaways that you noticed beyond what Rebecca just shared?
Well, going back to that first round, we also didn't see a maximum award of 170 million like we did that round. But this round, I would say a lot of the focus has been related to the scoring and what we're seeing in the scoring. I think it was interesting. Again, a high percentage of the applicants that submitted applications, two-thirds of them were within the scoring range of 104 to 110 points, with 110 being the maximum. And I think it just really highlights how tight and compressed the scoring has become with the applications over the years. And so I think that became a little bit more compressed at the top end, which just really emphasized even more how critical every portion of a point, how critical those are. Also, though, anecdotally, this is not in any of the debriefing documents or anything like that. There seemed to be some more disparity in scores from previous award winners. As you can imagine, when an allocatee receives an award, they keep their applications fairly similar for the next round, making updates to it, but not making wholesale changes, in hopes that they get a similar score that's high enough to receive another award. And we've talked to several that had been previous awardees and then were not in the kind of top tier of scores this round for some reason. And it really just kind of highlighted some of the things we'll be talking about later about the scoring process and what possibly could lead to that disparity in scores that we saw this round.
Now, that's pretty interesting about the disparity in the scoring. That's got to be a little frustrating for an applicant to have an application that they think is pretty similar but be scored differently.
Right.
And then one of the things that you mentioned is the point compression, in the sense that every round, it appears that the floor to get an award keeps going up and up, which does lead to one of the challenges. I know that first time applicants, or those that have applied for a few times, haven't gotten an award yet, is how do you get the feedback to keep kind of improving your application? And I mentioned in the opening that there was a low number of first time award winners, the lowest, tied to the lowest ever with 3. And then, Brad, I know that the New Market Tax Credit Working Group has talked about the issue of the low success rate of first-time applicants. And we don't know what the success rate was in this round, but we do know anecdotally that it was less, that the success rate of first-time applicants is definitely notably less than repeat applicants. So, Brad, if you could explain to our audience why you think it's an important issue, and then share some of what might help increase the number of first-time allocatees.
Yeah, I think it's important that the barriers to entry not be so high that applicants who want to access new market tax credits can do so without this mystery of how to get an allocation. And I think that's part of the concern with the scoring process, and the fact that scores aren't returned to everyone. They're only returned to those who don't receive allocation. So those that don't even know where they fit on the scoring range. But in terms of first time app award, I think that we have seen a low rate of success for a while now. And really it's kind of led to less applicants being incentivized to actually apply and try to get new market tax credit allocation. I think is part of the concern here, is that the pool of applicants has been pretty stable from what we've seen in terms of the number of new CDEs that apply. And so I think really you're not getting that increase in diversity among the allocatee pool that you may see if there were more new applicants. As we see with each round in terms of the makeup of the new applicants, there's some that may be more focused on a statewide service area or local service area that you may not see those needs being addressed by the current application or the current awardee pool. So I think increasing the number of new winners obviously would be a positive for the new market tax credit. And I think in terms of what could be done, I go back to this whole issue with the scoring and that there's not this transparency that I think that we've seen in other programs that have a scoring process. There's somewhat of a curtain that it's done behind that you don't get a whole lot of visibility into. And then with the amount of allocation staying roughly the same, at least for the last 5 rounds or last 3 rounds at 5 billion, you've started to see the scores compressing, as you said, and you're seeing more and more applicants score in that higher range. And so really, when there's only 25 points per section and only 2 reviewers looking at it, you can really have some disparity in scores, as we mentioned, based upon the reviewers that are looking at your application. And so before the program would have 3 reviewers looking at an application, but now that they've gone down to 2, we're really seeing some differences in scoring on essentially the same applications from round to round. And I think that there's some things that the CDFI Fund can do to fix that by moving it back to having 3 reviewers, but also broadening the range of scores and the scoring outcomes by increasing it from 25. Letting people know where the points are would probably help as well. And just maybe having some more consistent review criteria for the reviewers that they do have. And are some of the recommendations that the New Market Tax Credit Working Group has been promoting for a while now. And I think if you get some more consistency and some more, maybe a broader range of scores, you won't see as much compression. You can really see an ability for applicants to differentiate themselves, which they may not have as much of the ability to do so now.
No, I appreciate you sharing all of that. We could spend a lot of time talking about the ways in which to increase transparency and provide a more accurate assessment of any given application. I do remember way back in the day looking at the fact that when you had 3 reviewers, and you assume some small range of deviations, how often you might get a misscore, what the likelihood of it being caught with when you had 3 reviewers. When you have 2 reviewers, the chances of that are rise notably. So it would definitely be nice to get back to 3 and make a lot of the other changes that you've advocated for, in part on behalf of the New Market Tax Credit Working Group. I want to, Rebecca, turn to you. And you work with a lot of CDEs. And if I'm a CDE that recently won an award, there's a lot that I have to do. And if you could share your thoughts as to what a CDE that did get an award in this round, what they should be thinking about right now.
Sure. Well, first off, congratulations if you won an allocation. We've talked a lot about how competitive it is. So it's wonderful when you're in that winners group. The first thing is you're going to be entering into an agreement with the CDFI Fund called an allocation agreement. Make sure you're very responsive as that process is moving forward, because it does take time and you can't start deploying your allocation until you have a signed allocation agreement. So make sure you're focused on those communications. Make sure you have a game plan for your deployment of your allocation. We've talked a lot, and Brad and I talked to many within the industry, and CDEs are very focused on deploying their allocation quickly and effectively because they want to apply again and show their ability to deploy into needed communities and very beneficial businesses. But most likely, you have plenty of things on your plate as a CDE between deployment, year end, and then this upcoming round. And so you really need to manage your resources carefully. But I think that really ties into starting to think ahead for this upcoming double round. From many that I've talked to within the industry, whether they won in this last round or not, they're planning on applying. And the first thing I would say to do is review your prior application. As Brad said, a lot of times once the CDE wins, they don't want to change what worked, right? But with every application, there's changes, and you have to make sure that you're getting every fraction of a point. And so this upcoming round is interesting because every 3 years, the CDFI Fund releases the application for public comment. And so this year, we've seen the application come out twice for public comment. First, a 60-day window, and then a 30-day window, which just closed. And so you all have the benefit of seeing a recent draft of the application. That's most likely what the application will look like. So you've got a great template to work off of, but there have been changes. So make sure you're reviewing those changes. And if you have questions, reach out to us. I think Brad and I probably almost more than anyone know every bullet point change, and they added the word "the" and we saw it. But that's really important to make sure you're maximizing your points. So review that application, review the most recent draft.
That's great advice for CDEs that received awards. There's nearly half the CDEs that applied did not receive awards. So share some suggestions for those CDEs.
Sure. Well, I think the first thing, and Brad really highlighted it, we've seen such a compression in the scoring that really CDEs can only afford to maybe lose up to 2 points and receive an allocation. So really every fraction of a point matters. I think getting feedback is especially helpful. The debriefing letter that you receive from the CDFI Fund is helpful in gauging how you did on those first 2 sections, business strategy and community outcomes. You can see from that scoring, if you're not in that highest bucket of the 45 to 50 points, that's where you need to be. So there's an area of improvement. But again, I go back to reviewing your prior application. Look at your application with fresh eyes. Is there something that you can identify that can be strengthened? Invite other internal team members to review, invite your board members to review. Brad and I and a lot of my fellow colleagues, we look at applications that were both successful and unsuccessful to identify areas of strength, but also areas of improvement for you to consider.
Hey, Rebecca, I'm curious, when
Please.
applicants who were unsuccessful in a round, they get their debriefing letter and they see where their scoring was. How do most of those react in terms of what they want to do for their application in the next cycle? Do you have most saying, okay, we need to rewrite our whole application, we need to change everything? Or do you see it as more just tweaking different parts of it here and there?
I think that's a great question because I feel like if you had asked me that question 5 years ago and someone was in the lowest bucket, the under 100 bucket, they would immediately say, we're going to throw everything out, we're going to restart. But if you're in that under 100 bucket, your score could be very close to actually those that won, and it's not a bad application. It probably just needs a variety of tweaks to strengthen it. And so from what I see with most CDEs that were unsuccessful is taking a look back. Most don't think it's a complete rewrite. It's more of where do we need to adjust? And for many, what I have found is they need to focus more of their application. They can oftentimes be talking about too many things, right? We don't have as much transparency in the scoring that we want. And some CDEs are like, well, I'll do rural and I'll do this and I'll do that. And I'll just try to make the CDFI Fund happy with everything. But really, I find most applicants can be successful by focusing their strategy and making sure that strategy is very clear throughout the entire application.
Yeah, that's been my experience as well. Generally, the only time I see CDs wanting to kind of make larger changes is when there's been so many unsuccessful attempts using a similar strategy over all of those attempts. And then they have to kind of sit back and say, okay, is there something that we need to change in our strategy that's not reading well with the reviewers? And we've seen that where we've seen CDs been successful with a strategy, and then all of a sudden it almost goes out of vogue with reviewers, and they've had to change their strategy because it wasn't reading or scoring as well. And so I think it kind of depends on, have you been unsuccessful for the last 3 or 4 rounds, or was this just a blip in an otherwise pretty successful run of applications?
Yeah.
So thank you for that discussion. Thanks for asking the questions, Brad, and sharing your insights. I wanted to turn now to the central player in any new market tax credit financing. And of course, that's the local community business. And that's the entity that receives the subsidized financing subsidized by the new market tax credit. And that is the entity, that organization, that's the business that's providing tangible benefits to low-income communities. Now, low-income community businesses, they don't actually apply directly to the CDFI Fund for allocation. That's the whole concept here, is that they apply indirectly by applying to CDEs. And the CDs themselves get this award and then make below market rate financing available to eligible businesses. So, Brad, if I'm an eligible business, eligible organization, eligible activity, because obviously it could be nonprofit activities, give some advice to our viewers, to our audience, as to what they should be doing now.
Sure. I think that the first thing that I usually have to help a business understand is is help them understand the timeline and cyclical nature of the new market tax credit program in an annual cycle, and how your own project's timeline may line up with that. And so right now we're in this position in the cycle where you have awards that have just been made a couple of weeks ago. So there's $5 billion of new awards out there, but you're also looming ahead, and we'll talk about how far in the future the next application round may be. So you're in this place of, well, what do I do? I've got awards that were just made, and then I've got an application where I know that CDEs need pipeline examples. Who do I talk to? And so I think understanding the project's timeline of, is your project ready to close now? And we can talk about what closing means, because it means something different to probably each person you ask. But in terms of moving towards a financial close, if that project is ready now, or that business is ready now to start the process, then I think that figuring out how to market your project, hopefully you've already had conversations with CDEs that had just received an award. But if you haven't, being able to access that market and determine who may be the right CDE to invest in your project, because just because there was 104 awards doesn't mean there's 104 CDEs that can invest in your project. Each CDE has their own service area, their own business strategy. So when you see the award list, you don't just start from the first one and work your way down. You really have to understand a little bit more about each of those CDEs, and then trying to access. And so then being able to market your project to those CDEs in a way that lines up with what their strategy is and what they're looking to use their allocation for. Because those CDEs need to be able to report back to the CDFI Fund that they used their allocation in a method that lines up with what they said they would do with it. And so that's why I always say to potential prospective qualic Bs, you need to be able to speak the language a little bit. And a lot of that, to me, comes down to community outcomes and describing what is your project going to deliver to the community that it's located in, so that CDEs can determine whether or not that makes it a valuable and worthwhile investment. Because they would like to be able to say to the CDFI Fund, I used your allocation effectively and generated all of these outcomes, whether it be through jobs or wealth creation or housing units, whatever it may be, by using that allocation. And so being able to explain that in a 1 or 2 page summary will allow you to kind of market that, your project, your investment, to these CDEs. And ultimately too, determining the need. Don't just say, I need $10 million and not explain how and why you need $10 million. Being able to say how you're going to, what financing you can bring to the table and have already identified. Sometimes people confuse the new market tax credit incentive with a grant, and it doesn't work that way. And so understanding the mechanics of that as well. And then kind of taking all of those pieces and figuring out, okay, do I go to this pool of awardees that just has $5 billion? And don't forget, there's also CDEs who have previous allocation from other rounds still outstanding. Or do I work on my project and get it in front of CDEs that are going to apply in this next round, this $10 billion round, and get my project included in their application, so that when my project is more ready, $10 billion in awards are made next year, that my project will be in line and be ready to receive new market tax credit financing at that time.
Right. Thank you. That's great advice. And we've had prior podcasts on qualified businesses seeking allocation issuance authority. So we'll put, or seeking new market tax credit financing, I should say. So we'll put some links to those prior podcasts in today's show notes. So as I promised or in the beginning part of the podcast in my introduction, I said we'd speculate about the timing of the next round. The 2023 round was just announced. I always feel odd to be speculating so quickly, but when one round of awards is announced, the focus on the beginning of the next round intensifies. So Brad, if you could share with our audience what you know and or what you speculate about as to when the next round will open, as to when the applications will be due, so when the next round will close, as well as when you would speculate the next round of awards would be announced. So no pressure,
Yes,
not recording this or anything. So
right.
any evidence of what your predictions are.
Well, it's funny you say that because I did go back to the podcast where we first talked about the $10 billion round to see what my prediction was at that time. And I do have a revised prediction based upon new information. So I'll share that new information and then kind of how I get to my updated prediction. So the CDFI Fund has been signaling since the announcement of the combined $10 billion round that they would open the round in fall of 2024. So in some of those rumors that we were hearing, it sounded like that would likely be towards the end of 2024, or even possibly early 2025. And we thought 2025 was confirmed briefly when at the CDFI Fund advisory board meeting, the director seemed to insinuate that and say that the next round would open in January. But we were quickly corrected that was somewhat spoken and that the round would still open this fall. So we're definitely going to see, I believe, a round open this fall. So when you look at the calendar and the seasons and you're wondering when is fall, it actually goes till December 20th or 21st. And so I think that based upon that, and then the fact that you just had awards, obviously that factors into it. And you also have the application, as Rebecca mentioned, out for public comment. The 30-day comment period ends today. And so the CDFI Fund still has to review those comments and potentially make additional changes. And last time they put out an application for public comment after the 30-day comment period, the round opened about a month later. The CDFI Fund has also posted a blog post previewing the next round, reminding everyone that there will be a round this fall. Also indicating that in order to apply, you have to be certified as a CDE. And that's important this year because that's different from prior years where usually when the round opened, you had to have a CDE certification application submitted by a certain date. That's different this year. So it's definitely going to be something that comes into play. But the last year, they put out a similar blog post about 30 days before the opening of the next round. So with all of that information, I'm revising my prediction from our podcast earlier this summer, where I said I think it would probably be mid to late December. And now I'm thinking it'll be mid to late November at this point, based upon that. And when you go back and look, the 2022 round was opened November 18th and due January 26th. And the round before that was opened November 4th and due January 13th. So I think that if we're anywhere within that November timeframe, they will likely, as they did in those two rounds, have a slightly longer application period. So I think that if the round opens up sometime in November, that we'll likely see an application due date towards the end of January. And I think that one of the other things to keep in mind with all of this too is the QEI and Quilligy issuance deadline that has so much of an impact on all this. I think we could possibly see a similar deadline as we did in those rounds where you saw possibly a deadline sometime in a late March timeframe. And that's if they don't take into account some of the comments that we've provided on changes to that requirement.
And that puts the awards next year about what time frame?
So that puts the award somewhere in the September, I would say mid to late September, early October time frame.
Okay. So
however,
both of your schedule, your calendars now.
However, that's a $10 billion round, and we haven't talked about whether or not we think there's going to be a large influx of applications. We've kind of been around that 200 application applications submitted for the last couple rounds. But for some reason, there were 300 this year in this double round, which I don't think there will be. But if there was, maybe that review time takes a little bit longer.
And when you're on before, we did talk about what our expectations are with respect to a $10 billion round. And I think the general agreement was probably a higher average award size, as well as a higher number of awardees. And then obviously we'd expect there to be more applicants as well. Any other data points that or predictions you'd want to make about that?
I don't think so. I think I'm sticking with that. I don't think that there's been any indication of being any different. As I mentioned, I don't expect the number of applications to change by too much. I think Rebecca and I were discussing this. I think I was saying 210, and Rebecca, you were thinking.
I was thinking it could go up to possibly 225. And the only reason I say that is for some applicants, they apply every round. For others, they may have a smaller shop. And if they win in a round, they take a round off, they focus on deployment, and then they apply in the following round. But this year, the conversation, even before we had awards, folks were saying, whether I win or not, I'm applying. And so there's certainly a great opportunity here with the $10 billion. And I think a lot of CDEs recognize that. But again, I think that a lot of CDEs recognize how competitive the application is. And for CDEs that have not yet won, but have applied, they understand it takes a lot of work to do that. So I think that pool can only get so big because you do need to have a track record of financing and be able to understand this incentive in order to complete a competitive application.
So Rebecca, I actually have one last question heading into thinking about the next round. Brad intimated that there was this pending deadline,
Yeah.
but didn't give a date. It didn't give details as to what that was. That was a good tease, Brad.
So you go, Rebecca.
Take it away, Rebecca.
I will take the get. So this is a big update. So as Brad said in the past, if you were an entity that wanted to be a CDE, wanted to apply in the upcoming round, you just needed to submit that CDE application and you were fine. However, now you need to be certified by the CDFI Fund before that application round opens. And when does the application round open? I don't know. We just made a bunch of guesses and we're thinking sometime in November. And so one thing that the CDFI Fund provided that I think is very helpful is in the blog post that they released, they said that entities that want to become a CDE should apply by October 18th in order to be considered. However, I think the other point that is very important is they said, depending on the volume of applications they receive, just because you apply by that date does not mean that they will have reviewed and made all determinations. So with that, I would say, TikTok, it's time to go.
The better.
Yes, exactly. So go ahead, get started. Keep in mind the CDE application is much more streamlined and less intense, I think, than the allocation application. But you do need to engage a Newmark tax credit counsel so that they can get your organizational documents put together. And I would also recommend going ahead and getting a Newmark tax credit expert like Brad or myself or one of my colleagues, because you will make some decisions in that application that you want to make sure you're thinking through. But all of that should be done in short order so you can increase your chances to be a certified CDE in time for the application round opening.
Yeah, and I think that this is going to impact the number of applications in this combined round. Before we knew that the CDFI Fund was headed in this direction, I thought that when they opened up a $10 billion round, you would see a lot of people say, 10 billion, that's a lot. Maybe I will apply and form their CDE at that point and so forth. Not now, I think there may be some of those that get to that point and not know that they missed this opportunity because there's a CDE certification deadline. And I think that's somewhat unfortunate for those because unless you're tuned into Tax Credit Tuesday podcasts and already kind of in the new market tax credit space, there's probably not a reason why you would already know that there's this looming deadline out there. So good for us to talk about it, obviously, and hopefully people are realizing that if they haven't already. But I think in terms of making the program more accessible, I think this was one change that the CFI fund that makes it a little bit less accessible.
So thank you for that, Brad. Thank you, Rebecca. I appreciate both of you joining me on the podcast today. I did want to share with our listeners and viewers that the New Market Tax Credit Conference, as I mentioned earlier, is coming up in New Orleans, October 24th to 25th. Please join us. It'd be great for the three of us to see you there. It's going to be a lot of great information as well as great networking opportunities. And I'd also encourage you to join the New Market Tax Credit Working Group. Brad and Rebecca and others at Novogradac do a lot through the New Market Tax Credit Working Group. And it's a great way to participate in the New Market Tax Credit community. And before we move to our off mic segment, I did want to also remind listeners and viewers to subscribe to our podcast on whatever platform you prefer. Also encourage you to share the podcast with your colleagues who may be interested. And of course, do leave a review on your platform of choice. And with that, I wanted to turn to the off mic section. And this is a fun segment where we get to acknowledge our industry colleagues. And since I started with Rebecca at the beginning, I'll close, Brad, by starting with you. What's your industry shout out?
All right. So this podcast, my shout out is the CDFI Fund Director, Raghavan. And I want to give her a shout out for getting all of the parties and staff together to figure out how to combine the 24 and 25 allocation rounds for a double round. I think it's extremely important for the longevity of this program that these rounds get opened and awarded by the end of 2025. Hopefully we won't have that conversation in the future and need to do things like that. But I think in terms of from an advocacy perspective, as well as getting the dollars that Congress had authorized out into the communities for which they were intended is going to be a huge achievement. And kudos to the CDFI Fund for figuring that out.
And I agree with that kind of wholeheartedly. And I've always been a fan of trying to get ahead of the curve, just from the standpoint that you want to get the awards out doing good as quickly as possible. And by doing this sort of combined round, it'll get out 5 billion of it will get out a lot more quickly than it would have otherwise. So Rebecca, where does your shout out go?
Yes. Well, I'm going to be difficult as always, and I'm going to do a double shout out. So my first shout out is to those 3 first-time awardees. That's huge. I know as Brad and I have talked to other first-time awardees, they are so excited and so encouraged to deploy their capital. And so congratulations to them. And then another shout out I have is Ashley Wicks. She's an attorney with Butler Snow. And she focuses on all things tax credits. And she's not only an excellent attorney, but she's also an excellent speaker and teacher. So she'll be joining me at the pre-conference New Markets 101 Basics Workshop the day before our New Orleans conference. So Wednesday, October 23rd. So if you're new to New Markets, you're a business and thinking, this is what I want to do, definitely come. But we always have a great time teaching everyone about New Markets. So come and join us for that.
Well, thank you. And dittos from me to those shout outs. And let me say thank you again, Rebecca and Brad. Thank you for joining me in the podcast. And to our listeners, I'm Mike Novogradac. Thanks for listening.
This weekly podcast has been brought to you by Novogradac & Company, LLP. Archived podcasts are available online at www.novoco.com/podcast or by subscribing to the Tax Credit Tuesday podcast in iTunes. You can find related links referenced in this podcast in our show notes at www.novoco.com/podcast. Novogradac & Company, LLP is a national certified public accounting and consulting firm with offices nationwide. Learn more about our professional services at www.novoco.com.